So term structure, something we've talked about in our intermediate course. Obviously, the shape of the vol surface. Now, the crypto vol surface looks quite, well, when I say it looks different, it's the absolute levels of the vol that can look quite different, right? We're talking about vols in the 50s and 60s, okay? These are high vol levels, much higher than most other asset classes we trade, right? The only real comparable thing to these vols that is included in our cross-asset dashboard is something like natural gas. Crypto vol is kind of a thing of its own, right? So we track the shape of this term structure. We keep it relatively short, so we go from 1 week out to 6 months. Again, sticking to the stuff that's liquid and trades in decent size. 1 year options in Bitcoin and ETH don't really trade in that big size. They're not as liquid. So this is the liquid part of the term structure that moves around quite a lot, that we can actually trade and capitalize on opportunities on. So we're looking at the shape of that term structure every single week and tracking it and basically trying to preempt what the next move in that term structure is likely to be based on my understanding of vol and the type of positions that I think make sense. So these things will move around based on, you know, the market's suddenly moving a lot and the front end's going to go bid, so you're going to get backwardation, something like that. Or if it's really quiet, you're going to get steep contango, something that looks like this. And, you know, those moves from week to week can be quite wild, right? You can get 10 or 20 point moves in the short end of the curve. Here you can see this is very front end of 14 vols up on that particular week. And you can see sometimes the curves get distorted. So sometimes you get kinks in the curve based on events, again, covered in our intermediate course. And crypto has these well-flagged events that come, whether it's the Ethereum merge, whether it's the Bitcoin ETF, approval dates, things like that. But the market gets fixated on these dates, that you're going to get some game-changing piece of news, you're going to get a move in the market. And these curves can basically start to bend and kink around those certain dates. And you can then have a view on those events, to whether they're well-priced, mispriced, whatever it is, and you can trade on that. And that is what I do quite actively and quite regularly.